500 and NASDAQ closing at all-time highs. The Dow up, gold up, real estate.
Hey everybody, and welcome to another TrendSpider technical analysis series video. In this video, we're going to be going over the basic concepts of the ICT trading methodology, and joining us is our good friend Trade for Opportunity, who's an expert in the style. He'll be providing us with some additional commentary on how to think about these basic concepts, so let's jump into it.
Hey, I'm TFO. Today we're going to be talking about some ICT concepts, and one of the first most important things to understand is the concept of liquidity. So you can see I have marked out buy side liquidity and sell side liquidity here, meaning that people who got short in this range will commonly have their stops to close their position by buying their shorts back above here. And people who got long in this range will want to sell to close if price comes back below here. And so the idea is that at these extremes, smart money, quote unquote, is accumulating and distributing positions where these common stops reside.
As you can see from TFO's chart just above me, price makes a new high, pulling liquidity from all of the stops that are placed just above the previous high before it makes its move back to the downside. As this new high is made, albeit short-lived, what forms is essentially a broadening range. Some traders refer to broadening ranges as megaphone patterns, and we can see one in the chart here. At the fringes of a broadening range lies liquidity, and when price comes into previous highs or lows, it can create trading opportunities for those who are looking to profit off of the potential reversal. There are many ways to easily find these opportunities within the TrendSpider platform, but the most efficient way is by utilizing the broadening range shared scans inside the TrendSpider market scanner. Inside the scanner, simply search the word broadening, and you can choose between several scans that utilize the fractal trend lines indicator to automatically find these broadening ranges for you. Now that we understand what liquidity is and where it can be found, the next concept for us to learn about is displacement. Let's jump over to TFO for his thoughts.
Displacement is just a really strong move, and it's something that you ideally want to see paired with a market structure shift. You don't really want to see a kind of slow, lackluster move down beyond these lows to signal your market structure shift. You want to see exactly what's going on here. These very energetic candles that leave behind some fair value gaps that just indicate that there was constant selling pressure the entire way down, and vice versa for buying, obviously.
Now that we understand what displacement is, and most importantly, that it tends to signal a reversal of trend, the next important topic for us to learn about is the idea of a market structure shift. Let's kick it back to TFO for his explanation.
So after price takes this buy side liquidity right here, we have this market structure shifts I have labeled as MSS. And on the way down, we have this displacement, which is just this really energetic move that kind of signals our market structure shifts, is that we have constant selling all the way down. And along the way, we create some fair value gaps, which is where there is some gap between the wicks of the candle before and the candle after. So you have this really energetic candle where this is your FVG or fair value gap. Price breaks this structure and is turning bearish after taking all these buy stops. And now once it retraces into this fair value gap, this could be an entry to take it short and go lower, ultimately targeting again the objective of the sell side liquidity.
Now that we understand how to spot shifts in market structure, let's next go through a concept called inducement. It's important to understand the difference between inducement and a market structure shift because these two things often get confused for one another. So TFO, take it away.
Inducement is kind of just a lower time frame stop rate, and so I like to use those a lot, especially when paired with volume spikes. Just in the sense that if you're looking for the idea that price is always searching for liquidity and that it's always looking for trader stops, then if you come through a significant level and you see a volume spike, then you can assume that, maybe there was a lot of orders there. A lot of people exchange shares and contracts. And if we start to close back below that range, that could be reason to believe that we're just continuing the trend and we're just stopping some people out before heading lower.
The next and arguably most popular concept within the ICT trading methodology is the idea of the fair value gap. In this video, we went deep on fair value gaps, explaining what they are and how to easily find them using the fair value gap indicator on the TrendSpider platform. But let's get some thoughts from TFO.
I guess from the ICT 2022 YouTube mentorship model on his channel, there's this idea that he's covering for one trade model, you could call it, where you have this idea of liquidity being at the forefront of the model, and when price reaches for these liquidity levels and reverses pretty aggressively, you get these fair value gaps, which are these candles where you see a pretty energetic move and there is a gap between the previous candle's wicks and the following candle's wicks. So there's this gap here. On a bullish scenario, there would be one right here as well. But so when you have this case where price takes out liquidity and then breaks market structure by creating lower lows or higher highs in a downtrend, then price, you would ideally want to see retrace into this area for a fair value gap to potentially get short, targeting the other liquidity that is often paired with the initial one.
Finding fair value gaps is as simple as adding an indicator to your chart on the TrendSpider platform. Simply click the three dots, search FVG, say apply, and they will appear on your chart for you. Any fair value gap that extends out into the future is unfilled. And since we know that price likes to retest these areas, it might be advantageous to know when price arrives at them. If you'd like to create an alert on one of these fair value gap levels, just use your horizontal line tool, put it at the level, right click, say create alert, and go through your prompts. Once you've identified a market structure shift and you know where your fair value gaps are, the final thing you might be looking for is your optimal trade entry. Optimal trade entries are just that. They're the best places to get into a trade. So let's kick it back to TFO and learn how to find them.
Yeah, so optimal trade entries are just a 62 to 79% retracement of a expansion range. And so we have this market structure shift right here, pretty much at the top of the market downturn in January. And we have this big leg down that breaks structure, and the following leg up retraces into this optimal trade entry just barely before heading lower. And so it's usually best paired with a market structure shift. So you want a change in trend to be occurring, and ideally some fair value gaps in there to refine your entries even further before taking an entry, rather than just, sticking that retracement on everything.
Drawing your own fib sequences is a skill that traders develop over time. If you don't yet feel comfortable drawing your own fib sequences, that's okay. Let the TrendSpider platform do it for you, utilizing the Auto-Fib drawing tool. Simply click the Auto-Fib button, and the platform will automatically draw a fib sequence over the most recently completed move per the time frame you're utilizing. One final interesting concept found within the ICT Trading Methodology is the idea of a balanced price range. Here's TFO with an explanation.
Okay, so this idea of a balanced price range is another kind of accessory tool to have to all this market structure and fair value gap stuff. In this case, it's really just kind of a double fair value gap where you have an aggressive move up, an aggressive move down, or vice versa if you have an aggressive move down and aggressive move up. In this case, you have the former where you have fair value gaps on both sides, and this range is kind of wicked into before the immediate reversal. So this kind of foreshadowed your market structure shift, and then you had this fair value gap here for potential entry short.
So there you have it, folks, a breakdown on the basics of the ICT trading methodology, as well as some efficient ways to utilize the TrendSpider platform so that you can find and execute on these ideas. A huge thank you to our friend Trade for Opportunity for joining us today. I hope that you found this video helpful, and I can't wait to see you in another one soon. As always, happy trading, and catch you next time.